Welcome back to Income Trading 101, and today we're going to take a look at PayPal. PayPal has been in the news for various things recently, and I just want to take a look at their stocks. Like so many, they had a great run in 2020 and including even this year, 2021, but has had a pullback. So we're going to get a full analysis. So looks like I can track PayPal all the way back to summer of 2015. Today, by the way, is March the 30th of 2021. So we get that recorded. And I'm going to go all the way back. I mean, what a run. Isn't that amazing? This thing back pre-COVID dropped down to $83 and went all the way. It had a high of 300 and well, it looks like that might have been it. High of $309 this year before coming back to 236. Whew, $70 pullback. It's pretty strong. Let's go ahead and analyze this move. Well, you know what? This would be perfect for a little Fibonacci later. Let's do what we always do, which is start off with the moving averages. And the thing that really makes these moving averages work for me in my own trading style, I don't know about you guys, but what helps me is really flipping the time frames around, because that allows me to look at things a little more clearly from a different point of view. And so, but I do use the same format on each time frame, and that's a 10 period, a 20 period, and then a 60. And I like my mid-range to be red, so that's the 20, and I like my faster moving average, which for this is going to be the 10. I like that to be in green because that's my when it's on top, it lets me know that there's an uptrend, like we saw back in from really last April all the way through arguably March. I'm sorry, yeah, March of this year, February of this year, 2021. But we did see some pullbacks and a little bit of even a sideways pattern between then. So this is incredible. So right now, the averages, at least on the daily time frame, are all in line for a lower, for the market to head lower. So let's go ahead and switch this out to the 1 hour. See what we see. The 1 hour actually is experiencing some congestion because the 10 is actually above the 20. Oh, they're right on top of each other. Let's actually, sometimes it helps to just look at the numbers. So I was incorrect. They are in line going lower. It's just that the 10 period and the 20 are very close. So if you look in the upper left hand corner, you'll see $235.64 for the 10, $235.88 for the 20, and $239.48 for the 60-day. So they are actually in line. It's just that the 10 and 20 are relatively, or rather close together. Let's check out the 30-minute time frame. So in the 30-minute time frame, you have a scenario where the 10 is higher. Oh, nope, I was wrong. They are actually in line. It's just that the 20, let's expand this just so you guys see it a little better. So they are in line, but the yellow, you see the yellow and the red are very close. If you look in the upper left-hand corner, you'll realize that they are only a nickel apart, which means that could end up flipping again here soon. It's almost close enough to just say it's inconclusive or congested. And then at the 15-minute time frame, everything is tight, but you can see that there is congestion because the 10 is above the 20 but below the 60, so they are out of order, which means that we could be entering a period of stagnation, sort of lower price volatility for a little bit, or we can end up changing direction here soon for the overall direction that the moving averages are pointing in. So very interesting. It does look like this will be a pullback and not necessarily the beginning of a longer term downtrend, at least at this point. So let's go ahead and take a look at the MACD, see what we find out there. This gives us a good indication of where momentum's going. And of course, on the daily, it's going to stick with that major trend showing lower. But I'm really curious if we drop this down to the 1 hour. The 1 hour has already been sort of crossing. It crossed below the zero line, meaning it's in the oversold area, and seems to be preparing or getting ready for a pull higher, a bullish move. Although this period in the 1 hour is rather flat, and you see that in the momentum. So momentum's flat, which means it could easily trail off or go either way. It's kind of neutral. Let's take a look at the 30-minute and see what that shows us. So 30-minute time frame, we had that buy signal. We crossed again, and now we're hovering right near the zero line, which again can happen when markets are going sideways. And at least on the 15-minute chart, you do have this buy. Now, this crossover back here on the 25th of March was the strongest indication of a bull market going higher. And then you have another crossover here just earlier today, March the 30th. So the blue line, which is the MACD line, crossed the signal line earlier today. And now it looks like both are going to end up above the zero line, which could be an indication of some bullish behavior. But given the last bar, this last little 15-minute bar that's still being created, I see the 10 sort of angling lower. You could see it there. There is an inflection point, and it's going a little lower, which gives me a reason to pause, if you will, at least in this time frame, to question whether or not both are going to pull. So basically, if the signal line, the red line, were to pull into positive territory, it would make me feel a lot more comfortable about buying and being certain that this retracement, if you will, is done. Speaking of retracements, let's pull out the good old Fibonacci and see where we are overall with this last move. So let's see. Get a little Fibonacci retracement. I'm going to pull it from the low, the pandemic low, take it all the way to the high that happened last month in February, and drag this across so we can get a good reading. And there you have it. So we did pull back to the 38.2% level, and ironically, that level also seems to have worked for a little bit of support. So you saw support here in January the 6th, support again, January 28th, support again on March the 5th. And we appear to be traveling down to that right now. So if just from what I've seen thus far and watching these looking at the moving averages and whatnot, I would veer towards a pullback. A full pullback to continue the bull trend, possibly even retesting that 309 level. But here's the caveat. If we break this 223 level, $223, if we go below that, then I would actually look for markets to go ahead and approach the 196 level, which is the 50% retracement. But you know, this stock has had some periods of sideways movement, so it certainly can do that. So I would just sort of trade at your own caution, because nothing says these levels have to be met, right? They're just likely going to be met, just partly because so many people look for those levels and are expecting them. But stay vigilant, stay aware. I personally would wait a little bit. Like if you're entering a trade, if this is a new trade for you, for me, I don't have a position in PayPal. I would most likely wait and just allow a couple more days, or just wait for a more clear signal of whether to buy or see if this is going to push lower. Because, to be honest, with stock trading at $235 roughly right now, $235.41, going down to that 50% level is still a pretty decent move, right? That's more than 10% in this stock right now. So good to have an idea of where the levels are and what might be possible coming up. So that's it for today's video. Hey, thank you for watching these videos. If you would, go ahead and hit the subscribe button. I enjoy making these videos, and I'm thrilled that you watch them and will follow along with me on this journey. So have a great day. Happy trading.